Welcome to the morning report chart appraisals with me, Rich Perry, market analyst at Hand Tech Markets on Wednesday, the 26th of November. Once again, the European session has started on a mildly positive note, just beginning to push higher. 0.3% on FTSE, 0.5% on DAX. FTSE continues to underperform DAX. But other than that, the markets are fairly much in a consolidation phase, pretty much across the board. The forex markets, forex pairs on the majors side are in consolidation. The euro and sterling and yen especially are in sideways consolidation mode. I will talk about that through the charts in a little bit, but certainly looks like that. It is also filtering across gold. It just seems as though these markets are just waiting for a catalyst. There's a lot of US data out today, and also there is clearly the OPEC meeting tomorrow, which could have an impact on financial markets across the world. So I think that it's certainly going to be a little bit more restrained maybe this morning, moving into this afternoon. There is, as I said, a lot of US data to be released. You've got the durable goods, you've got weekly jobless claims, you've got University of Michigan consumer sentiment, and both new homes and pending home sales as well, so a significant amount for that could move the markets this afternoon. But I just get the impression that these markets, certainly again in front of Thanksgiving, I don't see there's going to be a great deal of significant movement in any of these markets today, and in front of also the OPEC meeting uncertainty tomorrow. So it just looks like these markets are going to be just in a bit of consolidation mode. So onto this US data, with, as I said, durable goods plus 0.5% expected. Weekly jobless claims continue to fall away, and the expectation is that that's just going to continue. It's going to remain under 300,000, which is a bit of a line in the sand also. And it just looks like we're going to continue this downtrend channel that we've had on the jobless claims, weekly claims numbers through this year. Then you've also got the Michigan sentiment that continues to climb. That is expected to be up at 90.0 on the revised expectation there, so again a better number there. And then into the afternoon, the home sales as well. 3 o'clock the new home sales comes out. Expectation of a 1% improvement on last month, 472,000 expected there, and also the pending home sales are expected to grow at the same time at 0.5%. So some solid expectations there on this US data this afternoon. So I don't think we're going to be all that shooting the lights out in terms of forex moves. The dollar remains in this sort of range-bound period. It's not really being able to break out any either way, and I think that the data out this afternoon is not really going to be giving us too much of a clue, certainly in front of this Thanksgiving holiday. Also, that sort of takes me on to my chart today, which is the S&P 500. S&P, wow, I mean, what a move we've had since the October low. It just continues to push higher. But the thing that worries me is look at the size of these green candles, these big bullish candles during the start of the run higher. Just gradually now running out of steam in terms of the strength of these candles. I mean, yes, you've had we had a consolidation a couple of weeks ago, and that sort of broke to the upside, but are we beginning to run out of steam? It's a thought that is certainly crossing my mind, with the RSI up at 72, which is the highest since June. Also, look at this period we had in August. I mean, we didn't have as long a run higher, but it certainly had a strong beginning and then gradually ran out of steam with the size of the candles just becoming increasingly neutral and then turning sort of more negative, and then you sort of gradually had this rolling effect, and then suddenly the S&P sold off quite dramatically into October. So I am mindful of this being potentially the case again. We're into new high ground, which is fine. There's no real problem there, but I'm just a little bit concerned that these momentum indicators are beginning to roll over. MACD is turned over. Also, the stochastics have sort of just, you could argue, now in a slight negative divergence scenario there. Not really anything that you can point to on the hourly chart. This is the entire run higher, but there is still that slight air of a rolling over of this uptrend. In terms of the hourly momentum, you'd say still positive, but it's arguably not really as positive as perhaps it could be. Again, that the stochastics there showing that slight negative divergence with the highs on the recent run just not being accepted on the stochastics, and maybe the MACD lines are also not as bullish as they once were through the early stages of this rally. So it's just a thought that is increasingly occurring to me, that this rally may be running out of steam, and traders may begin to start thinking about taking a few profits off the table. Anyway, in terms of the supports and resistances, you've got to zoom in quite a long way. Obviously, the yesterday's high, 2074, is a resistance, and then up. I mean, you'd go round number really. You'd go to, towards the sort of 2100 area. But in terms of support on the downside, you'd say 2050, mid 2050s is a sort of breakout. 2056. And 2056 was the reaction low, so 2056 is a reaction, and then back at 2040 I think is a fairly interesting support, because that was another sort of reaction low that we've had in the past couple of weeks. So 2040 and 2056 I'm looking at as my supports. Anyway, I wish you good luck in your trading on S&P today, and I will speak to you later. Thank you.